My name is Olivia Carter. I was 35 years old when my family finally learned that the receptionist they pitied owned the bank, holding their future. At my grandparents' anniversary dinner in Charleston, my aunt tapped her wine glass and made sure all 20 guests were listening. Still a receptionist? How sad. My cousin turned his phone toward the table, showing off a rendering of a glass hotel rising above the harbor. $80 million, he announced. We close the loan tomorrow. Maybe Olivia can make copies for us. Laughter moved around the table. My uncle lifted his bourbon and said I had never possessed the stomach for real business. I felt the old anger rise, but I gave them nothing. Under the table, my phone displayed a confidential calendar alert. Whitmore Hospitality, $80,000 request. Chair review, 8:30 a.m. My aunt moved the vintage burgundy beyond my reach and smiled. Some things are wasted on people who can't appreciate them. I asked my cousin whether the bank had accepted his projections and personal guarantee. He smirked. People at that level know who matters. The next morning, my family entered a private bank expecting champagne and a closing ceremony. Instead, a senior banker told them, "Your request exceeds management authority. Only our chairwoman can authorize the exception." The doors opened. I walked past them, took the chair at the head of the table, and placed my fountain pen on the unsigned approval page. Looking for my signature? My aunt went pale. My uncle stood so fast his chair struck the wall. My cousin stared at me as if the floor had disappeared. "Why are you here?" he whispered. They had no idea that the loan had already failed, or what their own documents had placed within my reach. Before I tell you what I said next, and how an $80 million dream became the bill for years of arrogance, tell me, what time is it where you are, and where are you watching from? I want to see how far this reckoning travels. The cousin staring at me was Marcus Whitmore. His mother, Linda, was the aunt who had performed my humiliation for the dinner table, and her husband, Robert, had controlled Whitmore Hospitality for almost 3 decades. Their faces belonged to my earliest definition of family and my clearest definition of exclusion. 11 years earlier, I had returned from college with a finance degree, 2 hotel internships, and a plan for protecting our family company from overexpansion. Robert let me finish 12 slides before closing my presentation. He told me investors trusted men who looked decisive, not young women who asked uncomfortable questions. That same afternoon, Marcus, who had changed majors twice and never completed an internship, received a vice president's title. Linda offered me a position supervising the front desk at one of their smaller hotels and called it a natural fit. I still remembered the white name tag she pushed across the table. It carried my first name, but not our family name. That was the wound beneath my calm at the anniversary dinner. They had not simply rejected an idea. They had erased my claim to belong, then offered me a uniform so I could smile while watching Marcus inherit the room I had prepared myself to enter. I took a receptionist job, just not the one they offered. Low Country Private Bank occupied 3 quiet floors above King Street, and my first desk faced the elevators. I greeted clients, booked conference rooms, and carried credit files between people whose conversations stopped when I entered. My relatives heard the word receptionist and never asked a second question. What they did not understand was that a front desk sits at the intersection of every crisis. I watched developers arrive loud and leave silent. I watched loan officers ignore polished presentations and circle one ugly number in red. After work, I studied commercial credit, hotel revenue cycles, debt service coverage ratios, and the difference between valuable land and land that could actually service debt. Elena Shaw, then the bank's chief credit officer, caught me correcting a borrower's occupancy calculation on a discarded draft. Instead of telling me to stay in my lane, she asked me to prove it. 6 months later, I was assisting credit administration. 2 years later, I was a junior analyst, with the bank paying for advanced risk training because I had earned it. My path from that desk to the chairwoman's seat was neither magical nor fast. At night, with written permission from the bank's compliance department, I built a cash flow forecasting tool for independent hotels. My first client was a 50-room property near Beaufort that was 3 weeks from missing payroll. My model exposed a pricing error, a wasteful linen contract, and a seasonal cash gap its owner had mistaken for permanent failure. I charged a modest fee and accepted a small equity warrant. The hotel recovered. Referrals followed. I spun the tool into low-country metrics, hired engineers, and spent 7 years turning it into a risk platform used by regional lenders and hotel operators. When a national financial technology company acquired it, my employees received their shares first. After taxes, I retained enough to lead a legitimate acquisition group. Low-country private banks' founding shareholders were ready to retire, and the bank needed fresh capital to grow. Through Grayline Bancorp, I invested $32 million of my own sale proceeds. Long-term investors supplied another $25 million. After 14 months of background checks, source of funds reviews, Federal Reserve scrutiny, and approval from state banking regulators, Grayline acquired 56% of the bank's voting shares. I became chairwoman 18 months before that anniversary dinner. Nothing about the purchase was hidden from regulators, directors, employees, or the public record. I simply declined interviews and kept my name off promotional campaigns. My family never found out because they had decided long ago that my life was too small to inspect. When they asked whether I was still at the front desk, I said I still worked at the same bank. It was the truth. Their contempt supplied the rest of the lie. The real beginning of their collapse came 22 hours before the anniversary dinner, inside a secure credit room where no family history was allowed to matter. Elena, now the bank's president, placed the Whitmore hospitality file on a screen. The proposed Harbor Crown Hotel would cost an estimated $114.7 million. My family wanted our bank to lead an $80 million syndicated facility, retain $12 million, and place the remaining $68 million with partner lenders. The new waterfront parcel and 3 operating hotels would serve as collateral. On the first page, the deal looked grand. By page 12, it looked hungry. $11 million of the borrower's supposed equity was itself borrowed through an affiliate. The forecast assumed room rates 28% above comparable Charleston hotels within the first year. Under their own optimistic scenario, projected debt service coverage was only 1.31. Under the bank's ordinary stress test, it fell to 0.84, meaning the properties would generate only 84 cents for every dollar of scheduled debt. A contractor had filed a $2.6 million lien against one existing hotel. Property taxes on another were late. Most troubling, Robert and Marcus wanted the facility to be non-recourse except for narrow fraud carve-outs. They wanted the lender group to carry nearly all the downside while they kept every title that sounded powerful. There was another problem they did not know I knew. Whitmore Hospitality already owed $47.3 million on a first lien term loan maturing in 31 days. 6 months earlier, Low Country Private Bank had acquired the administrative agent position and a $12 million participation in that note through a sealed portfolio sale by Coastal Atlantic, a lender shrinking its commercial real estate exposure. 2 partner institutions held the remaining balance. The Whitmore credit was one of 122 exposures marketed in the pool. When our diligence team identified my connection to the borrowers, I disclosed it in writing and recused myself from the purchase review for that asset. An independent committee, supported by an outside valuation firm, approved our participation and the agency role. No one had hunted my family. No one had altered their contract. Their loan documents expressly permitted assignment, and their chief financial officer had received the required notice. Marcus had apparently treated it like administrative mail. The existing note was already in trouble. It required a minimum debt service coverage ratio of 1.25. Whitmore had reported 0.92 for 2 consecutive quarters. It capped insider distributions, yet $6.4 million had moved from hotel operating accounts to family-controlled affiliates. Part of that money paid for the harbor parcel, and part covered executive lifestyle and representation expenses that included a yacht lease, private club dues, and renovations to Robert's Kiowa Island retreat. The bank had issued a reservation of rights letter and allowed a cure period. Marcus's answer had been the $80 million application. He planned to use part of the new facility to repay the maturing note, then finance the hotel that would supposedly solve every problem. He was not building from strength. He was trying to borrow enough money to hide the hole beneath him. I did not need a flashback to feel what that meant. In the electronic archive, Elena had found a much smaller file from 9 years earlier, a $620,000 kitchen renovation loan for one of the family hotels. I had prepared the credit spread as a junior analyst. My initials OC appeared on the final worksheet. Marcus had emailed the loan officer afterward, writing, "Whoever cleaned up these numbers is thorough." He had benefited from my work and never been curious enough to learn my name. That detail hurt more than the joke about the receptionist, because it proved invisibility was not the absence of value. It was the refusal to look. Our independent credit committee voted 5-0 against the $80 million request as presented. A real bank does not let one owner approve a loan out of pride, affection, or revenge, and I could not legally wave a pen over bad arithmetic and transform it into sound credit. But bank policy allowed one narrow path forward. Because the request exceeded management authority, carried a dangerous hospitality concentration, and depended on curing an existing default, it could reach a special board review only if the chair sponsored a written policy exception. Sponsorship would not approve the loan. It would merely allow disinterested directors to consider a heavily protected restructuring. Outside counsel documented my family relationship, barred me from the credit vote, and confirmed that I could choose whether to sponsor the exception if I stated my reasons and received no personal benefit. The committee drafted the only structure it could defend: new cash from the owners, full personal guarantees, independent management, asset sales, and strict control over distributions. My signature was the gate, not the verdict. Without it, their original application remained declined, and the old loan continued toward maturity. I looked at the empty signature line, then at the dinner invitation on my phone. The family believed tomorrow's meeting was a celebration. I knew it was a last chance they had not earned. "Why are you here?" Marcus asked again. His voice was louder now, but less certain. I let the silence settle before answering. Linda gripped the edge of the table and looked from me to Elena. "Olivia works downstairs," she said, as if correcting a seating mistake. "She's a receptionist." Robert was still standing. Color drained from his face, returned in a dark flush, then drained again. He demanded to know whether I had been sent to bring coffee. Marcus reached for the approval folder, perhaps believing he could close it and reverse what he was seeing. Elena placed one hand over the cover. I gave her a small nod. Every banker in the room stopped moving. Robert's chair rolled behind him, and when he tried to sit, he missed it by several inches and had to catch the table. The only person who did not look confused was their attorney, Julian Mercer. His law firm kept its operating line with our bank, and I had chaired the committee that renewed it 4 months earlier. Julian had seen my signature before. He slowly removed his glasses and told Robert, "You should sit down. She is the chairwoman of Greyline Bancorp and Low Country Private Bank." Linda's mouth opened, but no sound came out. Marcus stared at the brass nameplate in front of me, Olivia Carter, Chair. Then he laughed once, too sharply. "That's impossible." I slid the bank's annual report across the table. Gray lines controlling interest, my appointment, and the date of regulatory approval were printed in language so plain that even arrogance could not renegotiate it. Robert snatched the report and accused me of hiding ownership to lure them into the bank. I reminded him that his team had chosen us after 3 other lenders demanded more equity. Our ownership was public. The portfolio assignment had been disclosed. I had never solicited their application, never spoken to their loan officer, and never participated in underwriting. You weren't deceived, I said. You just never imagined information about me could matter. That was the moment their shock became humiliation. Marcus's phone began vibrating with messages from his chief financial officer, who had finally opened the bank's governance page. Linda whispered that I had allowed her to mock me the night before. I looked at her and said, "You did not need my resume to decide whether I deserved respect." A memory flashed through me, not a long speech, only the white front desk name tag sliding across Robert's desk and Marcus jingling the keys to his new executive office. I felt the anger that I had kept folded for 11 years open inside my chest. What destroys a proud family faster? Discovering that the woman they dismissed has power, or realizing she had value even when they believed she had none. Robert struck the table with his palm. Enough. We are here for a closing, not a family performance. Do you understand who we are in this city? I opened the credit memorandum. Today, you are the borrowers. Elena stated for the record that the independent committee had declined the requested terms. Marcus turned toward the other bankers and began selling again. He talked about the Whitmore name, convention demand, waterfront scarcity, and relationships stretching back 3 generations. One director asked why the equity contribution included borrowed funds. Another asked why occupancy reports submitted to Coastal Atlantic differed from figures supplied to us. Marcus answered neither question. He talked faster, then attacked the stress model, then blamed a temporary renovation, then blamed accounting. Each excuse made the room colder. Linda tried a different approach. Her voice softened. Olivia, sweetheart, whatever happened years ago, this company is your grandparents' legacy too. The endearment felt more insulting than the joke. She had called me sweetheart only after seeing my nameplate. I told her my grandparents' home and retirement trust were not part of the collateral and would remain protected. The company, however, belonged to the people who had controlled it, extracted cash from it, and signed its debt. Legacy was not a coupon they could present when numbers stopped working. Marcus leaned close enough for me to smell the coffee he had not touched. So, this is revenge? You bought a bank because we didn't give you an office? I could have shouted. For one dangerous second, I wanted to list every holiday joke, every ignored achievement, every time Linda introduced me as the one who never found her direction. Instead, I kept my voice level. I bought this bank because I learned how capital works while you were inheriting authority. Your application failed because you confused authority with competence. I turned the unsigned sponsorship page so they could all see it. The sentence you heard outside was simplified. I cannot approve this loan alone, and no responsible chairwoman could. Your original request is already declined. What you need from me is sponsorship of an exception that would let independent directors consider a rescue structure. I uncapped my pen, drew one short line beneath the blank signature field, and set it down. I will not sponsor the fantasy you submitted. Marcus's face turned gray. Robert's hands began to shake. Julian closed his legal pad because at last there was nothing left to pretend they were there to celebrate. Elena placed a second folder beside my pen. This one was not a proposal. It contained the existing note, the covenant notices, and a calendar showing 31 days until maturity. The family's $80 million capital stack had combined the $47.3 million refinance with the first phase of construction. Without a new lender, they could neither retire the old debt nor preserve the hotel brand agreement, which required committed financing by the end of the quarter. Robert said Coastal Atlantic had always extended his loans. Elena reminded him that Coastal Atlantic no longer owned this one, and that an extension was a new credit decision, not an inherited favor. The bank had not accelerated the debt, seized a property, or skipped a cure period. It did not need to. Time and the documents were already doing their work. Julian opened the loan agreement and read in silence. Robert ordered him to seek an emergency injunction, sue for interference, and call every regulator he knew. Julian's own firm borrowed from us, but that did not make him loyal to me. It made him familiar with our documentation. He had negotiated his firm's credit line across the same table and knew that our committees recorded conflicts, valuations, and votes. "I can challenge misconduct if I find it," he told Robert. "I cannot ask a judge to erase an assignment clause, a missed ratio, or a maturity date because you dislike the chair." Marcus turned on him, but Julian kept reading. The family had arrived with a lawyer they expected to use as a weapon. Instead, he became the first person they paid to say the numbers were real. I slid the committee's rescue term sheet toward them. I had not written its economics and would not vote on it. 5 independent directors, 2 outside restructuring advisors, and counsel had built it around the bank's ordinary distressed credit standards. If I sponsored the exception, the plan could advance to final review. Whitmore would have to inject $15 million of genuine owner cash, not money borrowed through another affiliate. Robert and Marcus would sign full personal guarantees. The company would sell its underperforming Savannah hotel within 120 days and market 2 undeveloped parcels. 75% of excess cash flow would sweep directly against principal. No dividends, family consulting fees, aircraft charges, club dues, or related party transfers would be permitted. An independent chief restructuring officer would control budgets, capital spending, and lender reporting. Marcus would step down as chief executive during the forbearance, and Robert would surrender unilateral board control. If performance missed agreed milestones, Whitmore would cooperate with a receiver or a sale process instead of exhausting the properties through delay. Linda scanned the asset schedule and froze when she saw the Kiowa retreat. The house was owned by Robert's Investment LLC, not by my grandparents, and the LLC was part of the proposed guarantor group. "You would take our family home?" she asked. I corrected her. Their primary Charleston residence was not listed. My grandparents' house, retirement trust, and medical funds were expressly carved out. The Kiowa property was a second home financed with distributions taken while the hotels violated covenant limits. The bank was not claiming it that morning. The committee required Robert to sell or pledge it as part of a voluntary restructuring. Linda had no guarantee before her and no legal duty to sign one. She also had no right to demand that depositors and shareholders finance a lifestyle the borrowers refused to risk themselves. Robert pushed the term sheet away. "You expect me to sell property, hand my company to a stranger, and put my name behind every dollar while you sit there enjoying this?" I met his stare. "You are asking the bank to risk $80 million. Until this morning, you expected to risk almost none of your own." Marcus said the Whitmore name was worth more than collateral. I told him a name could bring customers through a lobby. It could not make a debt payment. He accused me of using confidential information from dinner. I asked Elena to read the file chronology. Every variance, lien, distribution, and stress result had been documented before I accepted the invitation. The only new information from dinner was that Marcus intended to close a loan his own finance team knew had not cleared committee. His control finally broke. Marcus stood, pointed at me, and said, "I owed the company, because our grandparents had built it for all of us. When it was time to share authority, I was staff," I said. "Now that it is time to share liability, I am family." He called me bitter. I did not deny it. "Yes, what you did made me bitter. The difference is that I built something disciplined with the feeling. You built projections." Robert demanded to know whether I wanted them on their knees. I turned the sponsorship page toward him. "I wanted a seat at the table 11 years ago. You told me I belonged at the front desk. Today your seat is collateral, your title is a condition, and your future depends on the arithmetic you laughed at me for understanding. I do not need you on your knees. I need you off the bank's balance sheet unless you can tell the truth. Elena explained their choices without drama. They could withdraw the $80 million application and repay the old note at maturity. They could find another lender willing to accept the risk. Or, within 48 hours, they could submit proof of the required cash and request consideration of the rescue terms. If they did, I would disclose my conflict again, sponsor only the committee's protected structure, and leave the room before the vote. If they refused, the bank would follow every notice, cure, receivership, and foreclosure procedure required by South Carolina law. No shortcuts, no vendetta, no special mercy. I signed a conflict acknowledgement, not the loan, and pushed the pen away. The same rules will protect you from my anger, I said, and protect this bank from your entitlement. Robert left first. Linda followed without looking at me. Marcus remained long enough to whisper, "You are destroying this family." I answered, "No, I am refusing to lend $80 million to the story you tell about it." For the first week, the Whitmores behaved as if refusal were a negotiating tactic. Robert called lenders in Atlanta, Charlotte, and New York. Marcus promised one bank that the lien was being released and told another that our committee's concerns were personal. Both institutions requested the same tax returns, occupancy reports, affiliate ledgers, and UCC records. Both reached the same conclusion. A private debt fund offered financing at a punishing rate, but only with $25 million of new equity and stronger guarantees than ours. They rejected it and told Charleston that I had ambushed them. That story survived 3 days. Then, a local business reporter compared their claims with public lien filings, the expired development option, and Whitmore Hospitality's own delayed financial statement. The headline did not mention me. It read, "Whitmore Harbor Project Stalls as Debt Pressure Mounts." The public collapse came from promises Marcus had made before he had money. The International Hotel brand terminated its management letter when committed financing failed to arrive. The general contractor stopped mobilization and pursued its lien. Vendors shifted the existing hotels to cash on delivery. At the Charleston Hospitality Council, 2 executives who had laughed at Marcus's receptionist joke avoided his table. A conference removed him from a panel called "The Future of Disciplined Growth." It was not a punishment I arranged. I never called the council, the press, or a competitor. His reputation failed because the performance underneath it had become visible. On day 28, with no replacement lender and 3 days before maturity, Robert and Marcus returned without Linda. The expensive confidence was gone. They provided evidence of $12 million in liquid funds and a binding agreement to raise the remaining 3. I sponsored the committee's term sheet exactly as written, disclosed my relationship on the record, and left before discussion. The disinterested directors approved a 12-month forbearance and restructuring facility. Marcus signed his resignation as chief executive before the loan documents were released. An experienced restructuring officer named Dana Brooks took operational control. Robert remained chairman in name for 90 days, but every material decision required independent approval. For the first time in decades, neither man could move hotel money because he wanted something. The price arrived asset by asset. The Savannah Hotel sold first, for less than Robert had claimed it was worth, but enough to reduce principal. 2 waterfront parcels followed. Robert sold the Kiowa Retreat for $9.1 million and liquidated part of his brokerage account to satisfy the capital contribution and later his guarantee settlement. The yacht lease ended. His portrait disappeared from the flagship lobby when Dana replaced family branding with operating metrics. At the end of the forbearance period, the flagship Charleston Hotel still missed its cash flow target. Under a receiver-supervised process, it was sold to a national operator. The lender group was repaid. employees kept their jobs, and the Whitmore name came off the building. Robert did not lose a profitable empire to my mood. He lost control of an over-leveraged company to contracts he had signed and facts he had concealed from himself. Marcus paid differently. His condominium went on the market, and his membership on a development committee was not renewed. Former partners returned his calls only when Dana sat beside him. He spent 6 months reporting to the restructuring officer he had once dismissed as a spreadsheet person. Losing the chief executive title hurt him more than selling any object, because the title had been his proof that he mattered. Linda's fall was social rather than contractual. Whitmore's family foundation canceled a $1.5 million gala pledge it no longer had cash to honor, and the Preservation Society asked her to step down from its board. The women who had crowded around her anniversary table stopped inviting her once she could no longer sponsor their rooms. She sold jewelry voluntarily to preserve appearances, then discovered appearances have no resale value. One rainy afternoon, Linda came to the bank without an appointment. She did not apologize for mocking me. She said they had pushed me because they always knew I was capable, then asked me to delay the flagship sale until after her winter gala. I listened until she finished. "You did not challenge me to become strong," I said. "You were comfortable believing I was small." She began to cry and used the word family 6 times. I told her my grandparents were safe, their trust was untouched, and I would continue visiting them. But I would not interfere with an independent sale to protect her seating chart. When she reached for my hand, I stepped back. "You do not miss me, Linda. You miss access to a door you assumed I would hold open." She left without the delay. That night, I sat alone at the old reception desk in the empty lobby. I had kept it through 2 renovations, not as a trophy, but as evidence. I expected victory to feel warm. It did not. I felt relief, anger, and a grief so deep it seemed older than the building. I had wanted them to recognize me, and they finally had, but only after recognition became expensive. For several minutes I wondered whether the emptiness meant revenge had failed. Then I understood that satisfaction was not the same as joy. I did not need to enjoy their losses for the consequences to be right. Refinancing a lie would not have healed the girl they excluded. It would only have made depositors, employees, and honest borrowers pay for my need to be loved. I turned off the lobby light and left the desk where it was. 14 months later, Marcus returned alone. He owed $3.8 million and wanted half forgiven to finance a motel. He admitted he had never read my college proposal. "Now I know what it feels like when a room decides you are nobody," he said. I believed his pain, but pain was not repayment. I offered the same extension available to any cooperative guarantor, then recused myself. Marcus looked at my pen. "Did destroying us feel good?" "For 10 seconds, I said. Then it felt like burying a family I had already lost. "Why not forgive the debt?" "Because accountability is not revenge. I will not punish you differently because you are family, and I will not save you differently either." At the door, he insisted the Harbor Crown could have saved everything. I stopped him. "You did not lose an empire because I refused one loan. You lost it because you built $80 million of ambition on the belief that someone else would absorb the truth. My signature was only the last place you tried to hide the crack." Later, the First Desk Fund gave overlooked founders fair second reviews without lowering financial standards. I never forgave my family's contempt, but I never broke rules to hurt them. The cleanest revenge was building a life their approval could no longer control. Would you have signed the loan to preserve family peace, or let the consequences arrive? Tell me in the comments, and subscribe if you believe late respect is not always real respect.
We hope the story gave you a powerful ending and a meaningful thought to carry with you. Everything here is fictional and made only for educational entertainment. We hope to remind you that not every relationship deserves to be saved, especially when saving it means losing yourself. Sometimes the bravest thing you can do is stop rescuing what keeps hurting you.